Hey folks, sorry about the mess up. I apologize. Can anybody hear me out there? Hey folks, sorry about that mix up. I really apologize. I figured it out obviously. Thanks for joining in. Um, I already did market wrap, so I don't want to have to go over all the charts again. Maybe there's something that you folks wanted me to go over chart wise. Can you folks hear it all? For whatever reason, I can't do picture on picture. Hmm. Something's very wrong here. I'm taking it that nobody can hear me or can type into the chat box. All right, guys, this is not working out. All right, guys, this is not working out. All right, so here's what's funny is that here's the note that you folks have popped in, but on my back end, it's not showing the comments where they should be over here. So what I'll do is I'll keep an eye on this chat box here on my other monitor. So if you folks want to check out Market Wrap later on at your own convenience, we could do that. And if you want to go over some symbols, you want to offer up suggestions on what best to do with Wednesday nights, besides the fact of me learning how to use the system, I'm open to it. So normally I would screen share, but I'm having a technical issue with the screen sharing right now. Oh, there we go. Beautiful. All right, so let's bring up some charts here. What do we want to talk about, folks? Do we want to talk about market wrap? We want to talk about the Fed. We want to talk about your symbols. I'm here for you. And I want to figure out how best to leverage these sessions on Wednesday nights. We have more people popping in, which is great. Good to see. Beautiful. Good to hear. All right, so what I'm going to do is I'm just going to go and I'm going to let the comments populate. And we'll talk about what happened after hours today, and that was with FedEx. FedEx dropped about 9% in the after hours on a cut in guidance. They're blaming the trade wars. No shock there. And we can expect some pressure on thoughts on the Fed moves Wednesday. We'll do. Yep. Uh, this is actually a positive for a cut by the Fed tomorrow. Once they see that they're saying, and I wouldn't be the least bit surprised that this was a plant, that they announced it right before the Fed announcement because it's having an effect on the economy, and that this is going to give Fed Chair Powell cover to go ahead and cut rates as he seems necessary. Because as I've been saying, he's a reluctant warrior. He doesn't want to do this. He wasn't hired to be a Ben Bernanke or Janet Yellen. Trump hired him for a particular reason, and that was to be independent. And um, he wants to be. And he knows in all probability he should be uh, holding fast right now and applying the pain necessary to the economy to longer term make it healthy. But first, similar to chemotherapy, he's got to make it sick first by raising interest rates. And the president, politicians, they just want nothing to do with it. And unfortunately, they're going to take us down the road of zero interest rates. It's going to be great for stocks in the short term. Longer term, a major problem. So FedEx, uh, we should expect to see that this is going to be an influence on the markets tomorrow. If you take a look at the transports, on the day, they're barely holding on by a thread. All right, so we rallied off the lows of the day. Let's just say we closed at resistance. And what we'll be looking for tomorrow is a breakout. We should get that. Now, what I think is going to happen with the Fed tomorrow, I think that they are going to cut rates. Uh, the fact that oil pulled back today, let's take a quick look at the price of oil. We had a big pullback, no great shock. We knew it was going to happen because we had the piercing of the third standard deviation Bollinger Band. You had sellers move in, buyers from back here, back here. They sold strength, as they should. A lot of shorts probably moved in. It was easy money. And they had to take oil down, and they'll probably take it down further tomorrow in advance of the Fed meeting. Why? It's because it's inflationary. Yeah, well, yeah, definitely Amazon is taking their business away from FedEx. They're doing it on their own. I see Prime trucks around my house all the time. I'm sure you're seeing them around your houses now too. So yeah, no doubt about it. That's going to hurt FedEx. They're blaming the trade wars, but that's a great point. Now, seasonality shows September bearish for October bullish run for FedEx. And I'll wait for the answer. But do we have Barun on? Because he was looking for a review of Parker Hannifin. And I just want to go over this chart really quick because I'm very, very bullish on the shares in that this is a daily chart. Let's go to a monthly view. This is more of an investment, longer term, one that you could put away because you could see that we have been in an uptrend on this stock, with the exception, of course, with the financial crisis. We've been in an uptrend on Parker Hannifin since 2001, 2002. And this is a beautiful consolidation on this chart here. So I'm very bullish. We have a breakout on a monthly basis on RSI. The month is almost over. This is almost in the books. So unless something drastic happens, this is a very bullish setup for the coming month. Stokes putting in higher lows and now breaking out above this prior peak. And price has yet to break out. We've tapped this upper band of resistance. Volume this month is fairly light, I will say that. Now, in terms of a strategy for entering Parker Hannifin, I think that what could be done here is that we pulled back and we've retested support at 176 per share. I think that these shares could be nibbled on. And then as we break out and above 184.65, that's a buy. Hey, Barun, good to see you, man. The Fed can only disappoint. We're going lower. An interesting take. I've heard argument to that effect that additional rate cuts aren't going to help the market because they're not going to help the economy any. I could buy that. So while I, in principle, agree that ultimately we're going to go down, I'm really steadfast in my belief that the power of the presidency, uh, is such that they're going to keep this market aloft. I've been saying that. I've been saying it since we were breaking down here. It looked as though we were going to go. And I kept saying throughout this 2020 elections, we're probably going higher. And we're stone's throw away from breaking out to new all-time highs. So while, yeah, I agree in principle that the longer term prospects for the economy are not good, right? Another quarter point cut, it's not going to help. There needs to be a bloodletting in this economy. You have so much corporate debt that they need to allow some of these companies, a lot of these companies that are out there that shouldn't be in business, they need to go out of business. So it's unfortunate. I don't like saying it. I want to see my country do well. I'm sure we all do. But unfortunately, this is some voodoo economics. They used to say that about Ronald Reagan back in his day. Uh, that was nothing compared to what we're looking at right now. Powell is very conservative in nature, probably won't cut rates. I wouldn't, if he didn't cut rates tomorrow, I wouldn't be shocked at all. You're right, he is a conservative guy, and I think that he's got the principle that he should, and as Fed governor, he should act independently, and he should not cut rates. But again, the power, that's the pressure coming down on him. All the president needs to do is say, let's audit the Fed. Let's take a look at their independence. And that's it. Remember that the Federal Reserve is a private entity. It's not a government entity. So long story short, they don't want anyone from the government poking their nose in their business. Rand Paul and his father, Ron Paul, tried to audit the Fed for years. And they're senators. No such luck. It never happened. If you have the President of the United States threatening the independence of the Federal Reserve or vis-a-vis an audit, getting behind Rand Paul, these guys are going to fold like a cheap deck of cards. So they're a private entity. They're owned by the Rothschilds, the biggest banks in the world. So I don't think that they're going to allow that independence to go away. I just don't see it. Even if the Fed cuts, mortgages will probably stay the same or go up. Yeah, it depends upon whether or not they go back to quantitative easing. And from what I understand, they have already begun to, they've ramped up the printing presses again. They're buying back debt as we speak right now. It's already begun in the past several days. that must be a conversation at the press conference tomorrow. If a reporter doesn't ask about that, or if it's not offered up by the Fed chair, I mean, this whole corrupt system that we have here is just really, I mean, talk about fake news. That would be the ultimate if they don't bring that up tomorrow. So I think that they've already begun to build the balance sheet back up. I looked at Fred, which is the St. Louis Fed website for the Federal Reserve balance sheet, and a bunch of other reports like the money supply and for U6 and U3 unemployment rates. And there was no change. The Fed balance sheets was in a decline, but from what I understand, it's beginning to build back up. I haven't been back there in the past several days, but apparently they are buying back debt as we speak now. And in terms of mortgages, I think that they'll probably stay the same unless, of course, we get a lot of Chinese buying, or not buying, selling. But it appears as though there was a headline on Zero Hedge earlier today that the Japanese were they were taking over the lead position of the lead buyers of our bonds. So it looks as though the Japanese are stepping into the breach and they are buying back those bonds. If we look at monthly charts of the Dow, it looks as though we are consolidating in a box, maybe Q4 or double bottom. It's been a long time since we had double. Let's bring up the Dow Jones. All right, so as usual, I just want to take my crayon out and draw some lines. So yeah, we have for the most part gone nowhere for over a year. We do have, and I think this is what you're referencing, a double bottom setup. This is an extreme undercut double bottom. I frankly think that this was the plunge protection team saving this market from dropping. The Federal Reserve stopped cutting rates, and you saw the markets begin to bounce back. Now we are a stone's throw away from breaking out. I have to say, while I don't believe that the technicals warrant the breakout in the Dow Jones, I'm sorry, not the technicals, the fundamentals of the companies that are out there. I think that in all probability we're going to go higher because take a look at the chart of the Dow Jones going back. I have this on my indices chart list. Here's the Dow Jones quarterly basis for 100 years. I refer back to this chart quite often. I don't talk about it that often, but I refer back to it often when I'm thinking about shorting the market, because this uptrend includes a couple of bubbles and a lot of what you call irrational exuberance, as Greenspan said back in 1997. So just when you think that we can't go higher, we do, because most fund managers, mutual fund managers, can't short the market. They have to be net long. And even on a quarterly basis, I mean, there's only a few days left in the quarter, and it looks as though we are very close to forming a bullish key reversal bar on a quarterly basis. This is a powerful setup here. So I would be very reluctant to go shorting this market right now. And in fact, we broke out last quarter on a quarterly basis. We have a retest this quarter. You know, history has proven to us that once we get these retests and they hold, the probability of a continuation breakout is pretty strong. So, you know, Fed Chair Powell, if he doesn't cut rates tomorrow, we could easily see this chart change in a heartbeat. I mean, during his last press conference, the 2-year Treasury bond versus the 10-year Treasury bond yield, the yield curve, had not broken the lower band of a bear flag formation. After he spoke, this is a quarterly chart, or a monthly chart. It broke and nearly inverted in one day. So the power that he has the power that he's going to have tomorrow afternoon can change this chart in a heartbeat. So in 24 hours, we'll know whether or not we are breaking out to new higher highs in this market, or do we roll over? Because other than cheap money, there is nothing else keeping this market aloft. Looks like building energy for a big break. Yeah, I agree. I agree. And unless, of course, again, Fed Chair Powell says, you know what, I have to stick to my guns here, do the right thing. Uh, we need to keep our gunpowder dry for the next crisis, which is definitely coming down the pike. I get afraid to think about what the Federal Reserve is going to do once this bubble blows after they've already shot all their bullets in their gun. You know, what do they do next? And that's the scary part. Uh, you want to go over Hertz? Yeah, we can go over Hertz. I have it all ready to go here. So with Hertz, we'll begin with a weekly view here. Um, the weekly chart looks good. I mean, last week, a major breakout. So major, in fact, I need to see a pullback. I need to see this 14 level retested before I was confident in opening up a new position. And I would keep my stop right below that support level. And if we rallied up and through the 15 spot 2-1 level, which just happens to coincide with the flattening out, actually not even flattening out, it's still declining, the 20 period moving average. So that's going to act as a declining ceiling on the shares. So I wouldn't get overly aggressive on my buying until I got down to $14 per share. In fact, I wouldn't buy a share until I got down to $14 per share. Then once we begin to break out and above the 20 period moving average, then I would look to add more. And when you take a look at a daily chart, the daily chart, we were flirting with the third standard deviation Bollinger Band just a few days ago, right? So it's not inconceivable that we pull back down to the $14 per share level. Why? It's because we know that's where the buyers are, right? It was support here. It was support here. It was resistance here. It was resistance back here. I like $14 per share to scratch the itch, get long, then buy on a continuation breakout above that 20 period moving average on a weekly basis, if that makes sense. Nugget for 3 scenarios, quarter point. Yeah, okay. Good question. Let's bring up Nugget. As a matter of fact, I already have Nugget up here. Okay, let's talk about the big picture of where we are on hump day with Nugget. So far this week, a beautiful key reversal bar. Last week, we came very close to tapping, but we didn't touch the $28 per share level. I had hoped that we would hit that level. That's why I sold the puts at that 28 strike price, because if those shares were put to me at that level, I would have been happy, but it wasn't to be. Now, to your question, what happens? I think that if we get no cut, we're going to see Nugget drop like a rock. So if your bet is that Jay Powell doesn't move on rates tomorrow, then you need to adjust your portfolio if you're carrying Nugget long accordingly. Hedge it. Sell covered calls. You may even want to buy some puts. Sell covered calls, finance the puts. That's one way to hedge the position. If that's the opinion that you're of, that he's not going to cut rates. Now, a quarter point basis cut. Here's my thought on this, and I think that it's the most probable, is that we're going to get that quarter point cut. And what I would expect to see here is an accurate knee-jerk reaction by the market as usual on big Fed news. And what does that mean? Well, we got the quarter point cut. The logic would be that we would automatically go skyrocketing higher, right? But generally, that's not what happens. It's baked into the cake already. This week's price action assumes that we're going to get that quarter point cut. It's not assuming that we get a half point cut. Now, if we get that knee-jerk reaction, which is counterintuitive to the rest of the market right now, what I think could happen here is that we've broken out today on a daily basis, that we pull back at a bare minimum. We retest $32.50 to $32 per share. That's a minimum. On a more extreme pullback, we could pull back to $31 per share, retesting this breakout point for a couple of days. If we get a half point cut, before we go to the half point cut scenario, I'm not loving these Stokes. This is not generally what you see with Nugget. Normally, you get that double bottom setup, right? Sometimes it's a very shallow double bottom setup, like here and like here. Sometimes it's more dramatic, like here and like here. But generally, that's what you get, right? So I believe that you can't trade simply on indicators, but they do have personalities that square with the individual equity, or in this case, an ETF that they trade along with. We don't have that double bottom setup yet. We have a U-shaped recovery consistent with gold. So I'm concerned about that. So I'm kind of hoping that we do get that pullback, a retest of support. We get what we traditionally expect is that higher low on Stokes, and then we break out higher. That would make me excited because that is what we would come to expect. Now, to the half point cut, I need to think about this one. I think that what could happen here is that two things. I'm going to hedge my answer here because I'm a firm believer that the knee-jerk reaction is frequently the wrong reaction. So we may get a pullback and a retest and rally through the day's highs like really quick. Or on that news, we just go shooting higher. I mean, really higher. And especially if, here's what I want to add to your question, which is very, very valid, is that what if they start talking about QE, more QE? Remember that the market was rolling over only a few months ago because the Federal Reserve was rolling debt off the balance sheet, right? Once they said, okay, we're not going to do roll off infinity, and they stopped selling bonds, what happened to the stock market? What happened to gold? Right through the roof, right? So what now is going to happen if they say, okay, they're not going to call it QE because QE has failed, right? We haven't had 3% annual growth since George Bush. And we have a Federal Reserve that's got nearly $4 trillion worth of debt on their balance sheet. How are they going to unwind that without crashing the economy? I don't know. I don't know the answer to that. So uh, I don't know what they're going to call it. They can call it cupcakes. I don't know. But whatever it is, right now, they're buying back debt. They're calling it zero, nothing. They're not even talking about it. So I would expect a conversation to happen tomorrow with regard to the Federal Reserve beginning to buy more debt in the open market. So we'll see. Great question, though. I did some back testing. Buying the dips works 80% of the time. I agree with that. And when everyone shouts recessions, market shoots up. And when the market shouts all is good, it's a pump and dump. Uh, yeah, I mean, it's all about sentiment, right? If you have, I had my brother-in-law back in 2011 sitting at my kitchen table, and he's an electrician, but he's a great electrician. But his forte is certainly not gold. It's not the stock market, but far less gold. And so at that point in time, I was positioned in gold, but I'm sitting there with him and he says, you know what? I think this price of gold is going to continue higher. And my jaw dropped because that meant it had gone mainstream. And I turned to him, I said, you just inspired me to begin selling my position because, and no offense to you, his name is Alan, no offense to you, Alan, but this is a contrarian indicator. And his eyes just fogged up, and that was the end of the conversation. But yeah, it's also called a wall of worry, right? There's a lot of doom and gloom out there. There's screams of sounds of recession. The yield curve on the twos versus tens. I don't care about the other yield curves. I care about twos versus tens. And uh, there was a lot of chatter in the financial news media. We're going into recession, so the Democrats pile on the president. All of a sudden, no more yield curve. Why? Did the economy just get good? No, somebody manipulated the bond market. My guess is it's the Federal Reserve. So uh, they'll keep this market going. When they scream recession, more than likely they're wrong. We're not going to know when this bubble is over until it is over. And we know there's a bubble. It's a fact. Corporate debt, government debt, consumer debt. The Federal Reserve is about to run out of bullets. So it's going to be a crisis of confidence. Retest is the highest probability of trades on a back test. I believe that. Banks are rallying. Does that mean market fast forecast no cuts? Well, it depends upon the banks, right? If you remember what they did with the Volcker rule, they just defanged the Volcker rule. So that means that your money center banks, what they're going to be able to do is trade again with depositor money. So their profit center just expanded from simply loans and not being able to trade with depositor money to now being able to gamble again as they did. And I don't know the mechanics of what they're allowed to do. I'm not going to pretend that I do know it, but I do know that they are able to accept a lot more risk. And of course, it's going to come at our expense. It always does, right? So the XLF rally today, a beautiful day. It looks as though the banks want to go higher. XLF includes your money center banks. Now, if you take a look at the DPST, not a great day, right? But they're not trading. They're not in the trading business. They're in the business of making loans, residential, commercial loans. And the commercial real estate business, I wouldn't want to be making a loan in right now. And the home sector, which is still doing okay, they're not making any money on the margins. They're NIM, net interest margins. So that's a problem for them. So you're seeing a tale of two stories here. One of the money center banks able to, yes, make loans. They're also able to do Mortgages and mergers and acquisitions. You're not seeing much of that right now, but they're able to do that. It's another profit center. They have far more profit centers than the regional banks do. The VIX is going to skyrocket. Uh, if you're going by today's chart, I wouldn't agree with that just yet. What you're betting on is that the Federal Reserve is not going to cut rates. If they don't cut rates, I agree with you 100%. The VIX is going to skyrocket. You're going to see the S&P 500 come in, no doubt about it. I'll take a couple of more questions here. Buy some SDS as a hedge. I know the SDS, I just forget what it is. Ultra short S&P 500. I don't know. The daily setup is not looking inspiring. Let's take a look at it from a weekly view. You know, you have to do this in a situation. You know, you could put your hedge on, right? You can always stop out if the markets get what they want. And even if we get a quarter point cut, maybe the markets sell off because they were expecting a half point cut. Or maybe he doesn't talk about the Federal Reserve going back in and buying debt. Who knows, right? We don't know. So you can still put that hedge on if that's what makes you sleep at night. But if he does cut rates and he implies in that press conference more to come, I wouldn't want to stay short of this market, especially with that monthly chart I just showed you of the Dow Jones, and you can bet the S&P looks the same. They're going to take off. So I wouldn't want to fight those higher level view charts, meaning the quarterly charts, your 100,000 foot view of the battlefield, monthly charts, your 60,000 foot view, weekly charts, your 30,000 foot view with your daily chart being a 10,000 foot view. Way too close. If you're looking to put the SDS on for more than a hedge, you need to wait for a breakdown in the S&P 500 and, of course, a breakout. And one might argue, the way you look at the chart here, and I was looking at the SDXS, which is similar a few days ago, and it's the only reason why I knew to draw these lines the way I'm doing it right now, is that you could argue that we have already broken out on the SDSS. And I'll explain what I mean by that in a second. My mouse is not working. There we go. All right, so let me elaborate a little bit more on this. So here, back in during the week of August the 5th, we broke out, right? So can you make the argument that we're pulling back and retesting? Absolutely. In fact, last week, we broke down and we closed below this lower band of support. This week, we are back above it. So were I to get long of the SDS or get short of the market, I would put a stop right below last week's lows. I would get out, right? Because this is a weekly chart. What takes more precedence over the weekly chart? It's a breakout on a monthly and or on a quarterly chart of the S&P 500 to the long side, right? So if you want to hedge, good, that's fine. Hedge your position. Just make sure you use a stop loss if they cut rates, right? Please. And the low of the prior week was at 28.75. And that would put you down back below into this descending wedge formation, if that makes sense. And I'll wait to see if I have one more question. And while I wait for that to come through, because there is a lag here, I'll go over to the futures market. We'll take a look and see what's going on. No bounce back on FedEx. Yields are not yields, the Treasury note is a bit weak here, but this is a 30-minute chart. Let's pull back. Way too volatile for my taste. Yeah, so you can see that bond prices are finding some resistance at this 20-period moving average. This is a concern to me. So if we see a rollover on bond prices, that's going to put pressure on gold. Not so much the stock market yet anyway. Let's take a look at the dollar, which was weak today. It's trying to bounce back now, but we broke support today. We have a lower high. So the dollar's looking weak. The dollar is not forecasting right now higher highs for yields or for the Federal Reserve not to cut, I should say. It's more appropriate. Let's take a look at crude. Crude remains weak, not much happening there. Bitcoin. Hey, Tom, how you doing, man? Yeah, I can. Yeah, yep. I'm glad you brought that up. Glad you brought that up. All right. So I'm going to come back to this chart here. Let's bring up Angie's list, and I'm going to leave off with this. All right. So smart move, Tom. All right. So here's a weekly view of Angie's list. So we retested the lows of last week and we actually undercut those lows. So is it a bit concerning? Yeah, no doubt about it. To get long and we undercut last week's lows, no doubt about it. This is a speculative play. But when you take a look at the daily chart, I saw this. This is what first jumped out at me. I took a look at the daily chart, Angie's list. I says, wow, it looks as though we are beginning to put in higher lows on the stochastic. Then I looked at the price and I said, wow, it doesn't look all that good because we just undercut the lows of, what day is this? The 13th. So I'm concerned. So I said, let's do this. Let's negotiate with me. Okay, I'm going to negotiate. I'm going to rationalize this. Let's see how we look on an intraday basis. So let's go back to Thinkorswim. This is a 4-hour chart. And this was not the chart I was looking at. I was looking at a 30-minute chart. And I took my crayon out, I drew this line, and I watched and I waited. I wanted to see how we would close out this 30-minute bar. And if we had not rallied back to recapture it, I would have said, forget about it. I'm walking away. We're probably going to break the new lower lows. We'll revisit it down at another support level. However, we managed to recapture, hold, and then I think I bought in this bar here once we knew we were closing there. And then we pulled back the next 30-minute bar. We did a retest, and then I was able to breathe the sigh of relief because I knew that there were shorts waiting to get squeezed. And not that we had a big short squeeze into the close, but you could see we began to drift higher into the close, setting the stage for a move higher, hopefully, right? Not guaranteed, but hopefully in the coming day. I get the feeling that if we get the rate cut that we're expecting, that we'll probably get a rally here on the small caps. Not that the IWM did great today. It didn't. It closed below support, but it did rally off the lows of the day, as did Angie's list. So I want to keep that stop tight, probably below the day's lows. and then exit the trade. But I think that we do have some upside potential here with the catalyst being a short squeeze on Angie's list. And I hope that answers the question. Nat gas. I think the UGAZ pulled back today. So Tom, it looks as though I think these are two standard deviation Bollinger Bands here. Oh no, these are three standard deviation Bollinger Bands I have up here. We're a bit extended still here, Tom. I would be cautious. I'm not going to say that we can't press higher. We've been here before. We broke out above this bull flag setup. Can we do it again? Sure. But to me, it's a little bit extended here. RSI, still looking good. Let's drill down. We're consolidating on a 4-hour basis. You have some topping action up here. This is not going to be neat, but close enough. I would look for, as usual, the breakout and the retest, and then the continuation move higher to build the position. Nat gas, I think, looks good. Weekly view, we broke out last week. It looks as though we're doing a pullback this week. We haven't done a full retest yet, but we're close. So if we break out, I'm okay with buying that momentum trade because it would appear to be that we're having a continuation breakout. If we pull back and retest support, I would be okay with opening up a position there. I would keep it small, right? Let's just make sure that that support level holds, and then you could add on the continuation move higher. Okay. On UGAZ, similar story. Let's bring it up. We'll begin with a weekly look. All right, so here's what I would worry about here, Tom, is this. Here's the breakout. Now, on the UGAZ, obviously it's going to trade with nat gas. We are off the highs of the week. And I would just keep in mind that we have resistance above right at the $26 per share level. You're looking for a pullback to 18 or 19? That would be, I don't know. Listen, if we don't close out the week above this support level, yeah, we could head down there. I don't know whether or not I would buy that dip. I would wait in all probability for it to come down and retest the flattening out of the 20-period moving average, which is at 17.77. So that would be below your target of 18, slightly below it. So you're in the ballpark. So that would mean a breakdown of weekly support. So I would definitely show patience and wait for it to come down to that 20 period moving average. PB, I like a PB on NG to, oh, well, probability. Okay. Zynga. I haven't looked at Zynga in years. Let's bring it up. Interesting. Sorry with this, guys. I am OCD. I must do this. Hmm. All right, so we look like we are poised to put in a bullish reversal bar on a monthly basis. Nice uptrend. The trend is definitely looking good. We are above this peak here, last seen back in March of 2014. Wow. I like the setup. I do. Any idea what the short interest is? Tommy, you're really bearish on that guess, huh? Okay, that's funny. So you're looking to short it. That's funny. I meant to bring up the weekly chart here. All right, so the monthly view looks good. It's breaking higher, but the problem is that, oh, you're super bullish. All right, so I got to reread. On UGAZ, my plan is to see 18 to 19 as a first stop and continue down to 16 to 17 range as you recommended. Oh, I see. Okay. I didn't read the whole thing. I need my glasses. Gotcha. Okay. Gotcha, Tom. Yep. Yep. Okay. Yeah. Well, the DGAZ, that's the short ETF, right? So um, just keep in mind that you have that weekly support level below. I would wait to see whether or not we close out the week below that support level. I would wait until like the final minutes of trade on a Friday afternoon. If we close below that support level, then I would open up the short position. I wouldn't bet that we're going to break that support level because right now you have so much geopolitical risk out there. I'd be a little bit concerned about that. I would wait for the break before I decided to get short to fill that gap between where we're at now and your price targets. So just a word of caution on that. Just getting back to Zynga really quick. Weekly view. We attempted a breakout here and we were rejected. All right, so we're limping back now. We've had a nice run off the lows of August the 12th. I don't know whether I could buy these shares now. I think I would need to see a close above at least 610 per share. And I don't think that we're far away. We're only a couple of pennies away. But I need to see a weekly close above this resistance level here. Daily chart. Yeah, you need to avoid these shares right now because unless you're expecting a big move higher right away, you're already kissing the third standard deviation Bollinger Band, right? So we've had a nice run here. It can move higher, right? There's a good chance that it will move higher. But the fact that it remains that we do have resistance above, and the risk reward, if you're looking to enter now, is not favorable, right? I would rather wait for that pullback than the setup and buy the breakout, if that makes sense. So I'm worried that right now that you're looking to open up a new position on Zynga, and I may be misreading your question, but if that's the case, I wouldn't open it up right now. Okay, I would wait for that pullback or a recapture of support. Let the shares trade sideways. We're a little bit extended right now. You have Stokes, which is still rising, RSI still rising. That doesn't mean they can't pull back for a few days, allowing you a good risk reward entry point. Okay. Congrats on that trade, Tom. Hey, folks, I'm going to wrap it up tonight. I'm going to do a swing trading today, tomorrow morning, 5 a.m. Eastern Standard Time if you want to join in. And of course, the replay will be out there. I hope everybody got some value out of this. I really had a good time. I mean, really great questions, intelligent group, that's for sure. Um, if you have any feedback from me, negative, positive, please share it with me. I want to make these Wednesday sessions a regular event, and I hope to provide you more value. And your feedback allows me the opportunity to make what I do better. And I think that the questions here really made my job a heck of a lot more enjoyable. To me, it's not even work, to be honest with you. So thank you very much. And everybody have a great night, and I'll talk to you tomorrow. Good night. Thanks, Tom. Appreciate that.